Okay, let's jump right in. If you've glanced at the markets today, August 14th, 2025, you definitely saw it. Opendoor stock, ticker, open.
Yeah,
It's up, what, a staggering 25% just today.
incredible move.
Yeah, that kind of, massive volatility, it just makes you ask, what on earth is really going on with Opendoor?
Exactly. And that's our mission for this deep dive. We're going to try and peel back the layers on this recent surge.
Okay.
We'll look at Opendoor's actual business model, dig into the latest financials that seem to have kicked this off, and then importantly, look at the very different market views driving this whole thing.
Right. So before we get into the big price jump, maybe let's just quickly reset on what Opendoor actually does, for the sellers.
Sure.
Their whole pitch is a radically simpler way to sell your house. You get cash, you pick your closing date. Sounds super convenient. But how does that work? What's the catch, maybe?
Well, the way they make that convenience happen is kind of their core innovation.
Yeah.
They charge what they call a service charge. Usually it's like 5 to 8%,
Yeah.
but it can go higher, maybe up to 14%. And this isn't just a commission. It's meant to cover the risks they take on, maintenance, utilities, taxes, holding the house.
Oh.
It's really about giving sellers certainty, no showings, no staging hassle, and crucially, you can often cancel without a penalty.
So you're paying a premium, essentially, for that ease and speed.
Mm-hmm.
Makes sense if you need to move quickly.
Exactly.
So understanding that model, what specifically triggered this huge 25% jump today? Was there one clear thing?
Yes, absolutely. The main driver was their Q2 2025 financial results, which they just released. And they had some surprisingly good numbers in there.
Like what?
Well, they pulled in $1.6 billion in revenue. That was actually better than analysts expected.
Okay.
But the real headline, the bit that got everyone talking, is they hit positive adjusted EBITDA for the first time since way back in 2022.
Wow, positive. How much?
$23 million. Now, adjusted EBITDA, it's basically a measure of profitability from their core operations before certain costs. So hitting positive there, it shows real operational progress.
And that helps with the stock listing too, right? I remember there was some concern.
Precisely. It helped them get back into compliance with NASDAQ's listing rules. Remove that delisting risk, which was a big overhang.
Okay, so that sounds genuinely positive, especially given how tough the housing market's been.
It is.
But, is one good quarter enough? Are the bigger worries still there?
That's the million-dollar question, isn't it? And that's where things get really interesting, because it's not just about the financials here. There's this whole other layer.
You mean the social media factor?
Exactly. The whole meme stock phenomenon seems to be playing a role again, amplifying this move. And the stock was heavily shorted.
Right, the shorts. Explain that a bit.
Well, you had Anthony Pompliano, a pretty high-profile entrepreneur, tweet or post on X that he'd personally bought shares. He talked about believing in the powerful force of retail investors.
And that post directly moved the stock.
It definitely contributed to the momentum, including today's huge jump. And when you add in the heavy short interest, meaning lots of investors were betting against the stock, good news forces them to buy back shares to cut their losses.
The short squeeze.
That's it. It pours fuel on the fire.
Okay, so good results hitting a shorted stock, amplified by social media buzz. But the professional analysts, they're not all convinced, are they?
Not at all. You look at Wall Street, Keefe, Brewett, and Woods, for instance, they just downgraded Opendoor to underperform. They're sticking with a $1 price target.
$1 after a positive quarter. Why so pessimistic?
Yeah, it raises the question, right? Why the disconnect? KBW pointed to, well, ongoing worries about whether they can be consistently profitable. And that gross profit margin, it's still pretty thin at just over 8%. And what's really telling, maybe, is Opendoor's own forecast for Q3. They're guiding for revenue of only $800 to $875 million.
That's a big drop from Q2's $1.6 billion.
Huge drop. And they're also projecting an adjusted EBITDA loss again for Q3.
So the profitability blip might just be that, a blip.
Well, it aligns with this strategic shift they're making. They're pivoting towards what they call an agent-led distribution platform, trying to get more revenue that doesn't require tying up so much capital buying homes.
Which implies they'll be buying fewer homes, at least for now.
It certainly suggests a slower acquisition pace, yes.
And all this is happening against the backdrop of the wider housing market, which isn't exactly booming either.
Right. You have to connect it to that bigger picture. As of, mid-August here, looking back at July, active home listings were up almost 25% compared to last year.
More houses for sale.
But actual sales were down slightly, so more inventory, maybe less demand. That puts pressure on prices. It's a really tricky environment for a company like Opendoor, especially while they're trying to change their strategy.
Okay, so putting it all together for you listening, what does this mean? Open Door, they're clearly in the middle of a big strategic change, trying this agent-led model. And those Q2 results, they did show some real sparks of improvement, a move towards better financial health.
Hmm.
But this massive stock surge today seems heavily influenced by speculation, by social media buzz.
Yeah.
And that stands in pretty stark contrast to the caution from analysts and even the company's own fairly weak forecast for the next quarter.
It really leaves us with a fascinating situation. Open Door's story right now, it's almost a perfect case study of today's market, isn't it? You see how quickly these narratives, often fueled by online sentiment, can make a stock's price seem, well, detached from the underlying business fundamentals, at least in the short term.
So the big question becomes,
Where does the true value actually lie?
mhm,
Is it in the fundamentals that are still evolving, maybe struggling? Or is it in this powerful collective energy of retail sentiment that can create these huge swings? It makes you wonder what force will ultimately have the most impact on Open Door's ride from here.